Hi, my name is Tim Kachani. I am the Director of Platinum Accounting Services Limited and a Chartered Certified Accountant with the ACCA. I enjoy helping people understand their finances and getting a better grip really on the financial aspects of their life, because let's face it, it is one of the driving forces behind all of our lives here. What I wanted to talk to you today is about minimum wage and how actually this is making people poorer, which sounds like it doesn't make sense. Like, why would me getting paid more money mean that I've got less? How does that make sense? And I'm sure many people out there have heard this and thought, what's going on? How can I be getting paid more money and getting less? The reason why is essentially inflation. And I know that a lot of people hear that and they're like just confused and lost. So what I wanted to do is just give a very high level overview of how this works, why this is making people poorer, and why the people who are clamoring for it the most are the people suffering the most because of it, and why I don't really think it's the greatest idea in so many ways, and there are better ways to do it. So what I did here is bring up these calculations to show you how this actually works. So in this example here, you will see a company. In this company, basically you've got cleaner all the way down to a director here. This director, and logically what's going to happen in every business is that you're going to want to be paid more than the people that you supervise, always. Because why would you want to supervise someone and get paid less than them? That doesn't make sense. So logically, in the case of these people here, they're going to get paid more. These ones are going to get paid more than those ones, etc., 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 etc. And I've put the amount as 10%. I'm sure some people say 10% is not realistic, but this is just an example to help you see it. What I've done is I've selected this one here at 2,500. That is basically the prevailing minimum wage as at 2023-24. Basically, so that is the last time it got changed. And then from then it's now got changed to this one here, and has an increase of basically £2,000. So essentially, I rounded this one just for simplicity because most people don't pay exactly on the minimum wage amount. They pay like slightly higher, so that's why that's there. And what I will do here is I'll look at it based on 22.5 grand, so plus £2,000. Right, so what does it look like as a pay increase is the first question. So we take this and then we add onto it £2,000. Now, as you'll see, the lowest paid people have had a pay increase, because the thing is, when you increase minimum wage, you don't increase just that minimum wage person, because in this example, this person who's supervising him would only get paid 50 quid more. Why would this person be happy for only another £50 more than the person they're supervising? Answer, they wouldn't. They would obviously want more money, which means that they have an incremental increase. Equally, if this one increases to that, the difference between these is not large. This one is not going to be happy that they're getting paid the same as a cleaning supervisor in this example. So equally, they would look for more money, etc., etc., etc. So when you increase one person's wage, the people at the bottom, the people at the top will increase in salary. It will happen. So obviously that means as an incremental change, as you can see here, the one at the beginning is £2,000, but the one at the bottom is nearer £4,000. So a bit of a difference, okay? And the key thing is the £4,000 person has more headroom because they've got more money. It's very simple. Not only have they got more money beforehand, they've now got more money afterwards, which means that they are less impacted by change that in the market and the increases in cost. The lower one obviously has a smaller incremental increase. They have less headroom and less of a barrier before they're affected by this. But let's go further into this, because this is just the beginning, really. So when you look at actually what this means to people. So in this example, this employee has had £2,000 additional salary. So in this example, that additional salary is on top of their other salary, so it will be taxed. Of course it'd be taxed, because otherwise they'd be paid less than minimum wage. So logically there's tax to take off that. There's employees' national insurance, which is what this means, and employees' pension, assuming that they are opted in and haven't opted out. So that means they're going to take home £1,340 from the £2,000. Again, this is just an example here. So logically, if you take that £1,340 a year and divide it by 12, you get to this value here, which is £111.67 extra in their pocket, able to spend a month. So that is the increase in numbers in their pocket. Okay, but that's not the end of the story, is it? Because the reality is that this money needs to come from somewhere. And if you're an employer and you're employing these people, you need to earn the money to pay them. Otherwise, you go out of business. It's very simple. It's really nothing more complicated than that. You haven't got the money to pay them, you go out of business, or you reduce your staff. Those are the two options. Reduce your staff, go out of business, pretty much. Or charge more money, or reduce your costs, or a mix of the whole lot, which is exactly what I've seen so far because of the national insurance changes and the increase in minimum wage from the employees the employers I've seen. But let's see what this looks like actually in the economy, because let's face it, when you earn money, you're going to spend money in the economy to live, right? And that is going to turn into increased costs. So how does this work? And so in the example of £2,000 more to your employer in cost to pay you as an employee, obviously that employer is probably going to be VAT registered, otherwise it won't have employees. It's just the truth. Unless it's a very small employer, like 1 or 2 people, it's not going to necessarily be VAT registered, but as soon as you go over 3 or 4, you're almost certainly going to be VAT registered. So unless obviously you're exempt from VAT, but let's assume that's not this world. So in this example, you've got £2,000 more worth of invoice, but they're VAT registered. So their cost, the billing they're having to make is £2,400 just to make that £2,000, okay? So that means the prices people are paying out there in the world, you, humans, all of us, are paying out in the world is £2,400 before we've even blinked. Okay, on top of that, you've got employers' national insurance. This, because you have employees' national insurance, but the employers also pay national insurance. So that's an increase in cost. Employers also pay pension. The employer's pension contribution, that's increased. That's a cost to the employer. If they don't cover that cost, they're going to lose money. If they're going to lose money, they're going to go out of business. Pretty simple. So logically, these two things are an increase in cost, and you've got VAT on those because it's a VAT registered business, right? So let's add that into the equation. So now we're looking at another 432 quid, which is this money here. It's an extra cost of the business. But that's not the end of the story, is it? Because this employer is going to have an increase in costs anyway, which I haven't even factored into this. And also in the case of the employer's national insurance increase, also, if they've got multiple employees and they're over the exemptions, they're going to have an increase in that cost. And that's also not included in this. So it's actually far worse than what you're looking at here. But now let's go on to this line here. This line here, which is looking at costs a third of sale, it's almost unheard of to have a business with 0 expenses. You have your mobile phone, you have rent, you have insurance, you have stationery, you have all kinds of things. It's very unusual to have a business with 0 costs. So usually those costs, let's say in this example, is say a third of the sale. So a third of the total sale value is what we're actually looking at here. So in this case, I've just put £1,200 as a rough value, because logically they're going to have to pay that to be able to earn that money. Okay, so that adds up to £4,032 against £1,340, which is what you are getting paid as an employee. So an employee is getting paid £1,340. The costs out there in the market have gone up by 4 and a bit grand, which is a huge amount of money. So when you look at it, it's 336 against 111. It's 3 times the value. So now let's look at the annual difference. The annual difference is that one minus that one. 2,692 a year in difference between what's going in someone's pocket and what the increase in cost in the market is. And then also the monthly difference is this one. So same story over and over again, basically 3 times the value, as in this one times by 3 is this one, and this is difference, which is obviously times by 2. So this means that the costs in the market increase a huge amount more than people actually get. No, because it has to, because otherwise businesses close. And it's as simple as that. So when you increase minimum wage, you make the poorer people poorer, which is the statement I make. The reason why is this, because not only have you tripled the cost to these people in this against the difference, so the value you're getting, value you're paying is 3 times the value, but the people here at the top of this here, they have less headroom. You've forced up prices by increasing minimum wage because these people have more income, which means these people have more income, which means as a result, you're in a place where the people at the bottom of the pile, the highest part of the pile, the people with the most pay, these lot down here, have more headroom and are able to do more, whereas these people here haven't got the headroom and are then going to suffer more with these changes, because the reality is these ones down here can probably afford those changes because they're getting double the amount, right? They're still going to have an effect. Of course, that's not going to be a positive effect, of course, but they're going to be able to withstand that far more, okay? So that is the reason why minimum wage increases make people poorer. You get a larger number, but you can buy less with it. I'm sure everyone's noticed it when you've gone shopping, that you suddenly spend hundreds of pounds when you didn't used to before. So what is the answer? The answer is very simple. And this is an answer I've never seen any government ever do, which I think is insanity, but I've got lots of reasons why I think governments don't do that, but mainly coming down to lack of knowledge and things like that. But that's my personal opinion. So this is the way the taxes are working currently. So your personal allowance is £12,570. You've got your basic rate tax band, which is 13,700, which is this big blue area here. These two values added up together add up to that. So if you earn 50,270, then over that you start hitting 40%, pretty much. So wherever you land, so if you get 40 grand, you're going to be around here. You're going to pay nothing on this bit and for 20% on this bit. That's the way it works for tax bands, okay? But if the government, instead of changing minimum wage, changed tax bands, then the inflationary effect is nothing, because the costs have not increased to anyone in the market, right? So actually the inflation effect of salaries in the market, or there's other effects, salaries in the market is then non-existent. But you can actually then use tax to get the right people to get money. In this case, the lower paid are actually more able to support themselves. So if, for example, you increase the personal allowance to £20,000, what you've done is give basically £7,500 extra here in this example, which means this lot up here, who are only earning 22.5 grand anyway, really there's only 2.5 grand that's going to be taxed, rather than basically 10 grand, right? So you're looking at losing 2 grand here, 20% of 10 grand, you're looking at losing 20% of 2 grand, so 400 quid here. So a bit of a difference for the poorest people in the country, which means they've got more money to spend, which means they will spend more money, of course, which makes the economy better, which is good. So obviously the government needs to earn money, because if it doesn't, it goes bankrupt, and that's not great. So logically, the people who are paid over 35,000, which is what I've done by squeezing this blue bit, I've made it smaller. So I've made the 20% band 20 grand rather than 37. So obviously I've lost money here, but obviously they gained money here. So I'm sure these people are going, oh, well, you know, I earn £40,000 and I'm not happy because I'm now going to be paying more tax. Not necessarily is the answer, because actually those people aren't paying tax on this bit here, are they? So those people were previously paying tax on this bit and now not. So logically, the difference between these two things here, which is this value here, is extra money which was taxed at 20%, now not. So you can actually say the incremental point of difference for that person would be £42,000, 430, before they start to get more tax. Anyone over that, to be honest, they've got more headroom, they can afford more tax, in my opinion, and definitely can afford it more than the poorest people in the country, 100%. So the rationale is that with this, it means that more money is going to the poorest people, and the people that are earning over that would end up paying more money. The government would obviously know these values, and they would be able to work out the point in which this gets squeezed, as in the 20% band gets squeezed, to make it make sense and make the incremental difference either probably slightly in their favour. It's the government, after all, of course they're going to make it slightly in their favour. So I would imagine that they could do this very easily because they have the data. They can do that, but they've never done that. And this would actually help the poorest people, not a minimum wage increase. My name's Tim, as I've already said. I really do enjoy helping people understand their finances, and I would suggest that you could follow my YouTube there, subscribe, and leave any comments to do with anything that you would like me to cover as a topic in the comments section. But until when I see you next, I wish you all the greatness that you deserve.